Morning, everyone. We are Group 59. We are evaluating the market entry of Capitec, doing the strategic assessment of them entering the market in Ghana, and exploring the growth opportunities and exploring how the financial landscape is in Ghana.
Good day, everyone. Today I'll be assessing whether the basic need potential exists for Capitec Bank to enter the Ghanaian market. An initial screening shows a strong need for innovative, accessible banking in Ghana. According to recent World Bank data, around 57% of Ghana's adult population holds a bank account, but many still lack access to affordable, simple banking services, similar to the gap Capitec successfully filled in South Africa. Ghana's growing middle class, urbanization, and mobile penetration present favorable conditions for Capitec's low cost, mobile first banking model. The country's stable political environment and consistent economic growth further strengthen the basic needs potential. There is an increasing demand for banking services tailored to first time users, small businesses, and informal sector, all of which align with Capitec's expertise. In terms of topography and infrastructure, Ghana's urban centers like Accra and Kumasi are highly accessible and technologically developing, ensuring Capitec can roll out its services effectively without being overwhelmed logistically. Therefore, based on the basic needs potential analysis, Ghana presents a favorable opportunity for Capitec Bank expansion, particularly through a mobile driven entry strategy. Thank you.
Good day, everyone. Today we want to share a strategic overview of Ghana as a potential market for Capitec Bank. As you can see on this graph presented, Ghana's steady growth in GDP signals a promising economic environment with a growing middle class and increasing demand for a banking service. However, inflation remains a concern. High or unpredictable rates could signal an economic instability and increased risk. Exchange rate stability is another factor, especially when converting from the South African rand to the Ghanaian cedi. This volatility here could impact profit margins, so predictable currency trends are crucial. Moving on to the next slide. Demographically, Ghana offers a large and urbanizing population, presenting strong market opportunities. A growing middle class means higher demand for formal banking services like loans and mortgages. Moreover, relatively low level of banking penetration creates room for Capitec's affordable and accessible offerings. Ghana's mobile currency ecosystem also presents a challenge for and opportunity for Capitec's digital bank. Capitec digital strength could position it well to leverage itself. Regulation wise, understanding Ghana's banking laws, particularly those related to international operations and profit reputations, is critical. Interest rates and credit risks also require close attention as they could both impact lending potential and default risks. Lastly, while entering the market will involve upfront capital and operational costs, the high return in equity of 35.3% in Ghana's banking sector compared to Capitec's 26% suggests strong profitability potential. In conclusion, with its robust financial base and digital expertise, Capitec's well positioned for expansion, but a thorough, thoughtful, strategic approach will be key to navigating Ghana's unique market dynamics. Thank you. Now over to the political legal screen.
Good day. My name is Lefilwe and I'll be doing the political and legal screening of Ghana and Capitec's bank entry into this market. When you look at the political environment and the legal environment, there are two main differentiating factors I want us to look at. The political environment focuses on the government's actions, whereas the legal environment focuses on the laws and regulations in a country. We see that with Ghana, for the past 20 plus years, they've had peaceful elections and policy stability. This means there's no volatility in the state. A predictable business environment makes it very attractive for market entrants. However, there are risks that are persistent in this country. The weak state capacity and inefficient public services means that the quality and distribution to the citizens is unequal. The high corruption perception, especially in procurement, also poses as a problem because bringing products or services in and out will be a major issue. The biggest one also that we see is the political patronage that affects fairness in Ghana. This simply means that people are hired based on their connections and who they know rather than on their merit and on their capabilities. The legal environment of Ghana says and tells us that there's no major barriers to foreign banking ownership. The Bank of Ghana regulates itself using a Basel-aligned standard, which encourages standardization in the banks of Ghana. There are risks as well as with anything, and this is the inconsistent law enforcement that is persistent, the corruption risk in the regulatory process. They have a major issue of bribery that happens in this country and getting your way through just sliding money under the carpet. There's also a slow contract enforcement that is persistent, which will be an issue for us trying to enter into this market. However, there are strategic recommendations that we can put in place to try to combat all these issues that have been raised. And that is simply having regular engagement with policymakers, understanding the ins and outs of Ghana and how they do things and how they operate will be very helpful for Capitec. They also need to leverage on their local partnerships. The people of a country are who know best about it. Therefore, consulting with them and having a proper relationship will make it easier for market entrants. Thirdly, a robust compliance and risk management will combat the corruption issue that is persistent in this country. Having regulations that are very strict will ensure that no illegal happenings are in place. The ethical business practices is just as a company overall, we need to be ethical in the way things are done so that things can be achieved properly. To conclude, Ghana is an attractive market for Capitec's expansion, but this needs to be done with caution. The success is highly dependent on partnerships, the regulatory diligence, and the robust compliance of Capitec. Thank you. I will now pass over to my colleague who will look at the social cultural screen.
After conducting a screen of the society and culture that governs Ghana, we found the following: that Ghana presents a compelling paradox. It boasts a fast evolving banking sector, yet access remains uneven. Many Ghanaians, especially those in underdeveloped communities, remain excluded from formal financial systems due to historical distrust and structural inaccessibility. Much like South Africa, Ghana's financial history has been shaped by colonization and the subsequent exclusionary banking system. This distrust has been carried over many years. It came to a head during 2017 and 2019 when 420 financial institutions closed down. The Bank of Ghana revoked licenses due to poor governance, insolvency, and fraud, leaving many Ghanaians without access to their savings and deeply skeptical of banks. We also found, across 3 major studies, that financial literacy in Ghana is particularly low amongst women, low-income earners, and those in the rural areas. Whereas literacy is positively correlated with increased savings and financial planning. And so this gap highlights both a need as well as an opportunity. There is also what we found a burgeoning class of financial influencers in Ghana on platforms like TikTok and Instagram, where they share financial information and boast high engagement rates. This shows that Ghanaians are motivated to take control of their finances when given the tools and the information to do so. Moving on to savings. In Ghana, there is a culture of informal savings that signals a deep cultural preference for trust-based, almost communal financial practices. Used in Ghana is something called Susu schemes, which mirror our stokvel system. On the next slide, we'll be talking about where we enter. To conclude, entry into the Ghanaian financial market is not only favorable, but it is timely, as long as Capitec puts at the center a trust-first messaging that emphasizes transparency, accessibility, ethical governance, differentiate ourselves from institutions that are perceived as opaque. We understand that we can tap into the growing ecosystem of financial influencers, meet people where they are, as well as leverage our digital platforms and offerings that are aimed at empowering users. We know that trust in Ghana is built interpersonally, not institutionally. And for Capitec or any other new entrant, building credibility through visibility and community engagement is essential.
Right now, the market is led by big names like Ecobank, GCB, Stanbic, Absa, and Coalbank. These banks are strong. They have many branches, good digital service, and strong communication with both big companies and small businesses. But it's a tough market. There's a lot of competition. Customers have many options and are expected more. New banks can enter, but it's not easy. And now fintech companies are starting to offer similar services, often in faster and cheaper ways. Capitec's strength is its low-cost digital banking model. It focuses on helping more people get access to banking, especially those who are often left out. That's a big opportunity in Ghana. There are There are also challenges. Not many people in Ghana know the Capitec name. The existing banks are well known and trusted, and to succeed, Capitec will likely need a strong local partner or something really that makes them stand out. In short, Capitec has a great model and a big opportunity, but it must work smart and connect with our local markets too.
Good morning or afternoon, everyone. Today I will briefly present our market evaluation for Capitec's potential expansion into Ghana. So, after carefully applying all 6 of the screening tips, focusing on basic needs, economic, political, socio-cultural, and the likes of a competitive environment in the country, our findings strongly suggest that Ghana is an attractive market, but it requires a strategic entry approach in order for them to be successful. Starting with basic needs, Ghana shows a clear demand for accessible and affordable financial services, especially among underserved low to middle income groups. So Capitec's simple digital banking model seems like a perfect fit for this kind of market and aligns well with the needs of this demographic. And from an economic perspective, although Ghana faces high inflation and some financial risks, its banking sector remains resilient, experiencing, I think, a 35.3% return on equity, and that's even higher than the 26% they are currently experiencing in South Africa. From a political and legal standpoint, Ghana is a relative stable country in terms of that, and they are very open to foreign investments. However, challenges around corruption and weak law enforcement highlight the importance of partnering with a local player or local company in this market, operating in this market. In terms of the socio-cultural environment, Capitec focuses on financial inclusion, digital simplicity, and this is a strong fit. Their experience in addressing financial literacy through community and education in South Africa will translate well into the market in Ghana. The competitive environment, however, is challenging. Established banks and the rise is rising, but still limited. Use of mobile money services means that Capitec will need a clear value proposition. A joint venture or a strategic alliance with a local partner is highly recommended in order for them to establish trust and to leverage the existing infrastructure upon entering this market, as well as making them able to do it quickly. So, in summary, Ghana presents a highly promising opportunity, but this can only be highly promising through a strategic, locally informed approach, specifically by forming a joint venture or strategic alliance in order for them to mitigate these risks and to maximize the input or the impact they have in this market upon entry.